Well, howdy there, folks. Welcome into this video. We got a lot to get into in this one. We have oil prices absolutely collapsing. We're going to talk about what's going on here, why it's happening, what's likely to transpire. We're going to talk about Palantir. Palantir got screwed 2 times in really the past 24 hours or so. And there is one good thing in regards to Palantir that we're going to speak about in this video as well. We got a plethora of earnings that just came out in the last couple hours here. We got some insane moves. We got some Tesla competitors that reported earnings. Rivian and Lucid, we'll talk about those, and countless other stocks. So busy, action-packed video. I appreciate everybody being here as always. Thanks so much for being subscribed, folks. A lot to get into in regards to this one here today, okay? So first off, WTI is absolutely collapsing right now, okay? Since the end of September, WTI is down almost 18%, 17.7%, and it's really showing no signs of a bottom right now. It's just really in complete freefall. Since the start of the Middle East conflict right there, we've dropped from about $90 a barrel down to $77 a barrel. So right now we're just in kind of a free fall time period for WTI. No one really knows where the bottom is, and good luck trying to predict the bottom on this one. Not even the most bullish bulls can predict the bottom in regards to WTI, right? Now, we also got to think about the time period we're going into, and this is usually you're going into the weakest time period for oil prices in general. Now we're in November, right? December, January, February, usually very weak times for crude oil in general. So it's not the time of year you would really expect any sort of bounce back anytime soon in regards to this. It looks like it could be a very, very weak next several months unless we have some sort of situation where the Middle East goes out of control and we have this country enter and this country enter and we have a bunch of drama there. That could be a problem for crude oil. But you basically need things to get materially worse in the Middle East in order to spike oil anytime soon, okay? Now, on top of that, we have this interesting time period, right, where EV sales continue to take off, and I think these are kind of conservative projections, in my opinion. These are not only the past numbers, but projected EV sales in the world over this next few years, okay? This shows you 2024, 2025, 2026, 2027, 2028. So if you think about the longer term demand here, it's not in a very good place. And if you know what's going on in China, China's pushing more than anybody right now for EVs. Like, guys, I don't think people are even understand how crazy it's gotten in China. In China, like, you can't even really consider like buying an ICE vehicle now at this point in time. It's becoming like that, okay? And never mind where China wants to go over this next few years. It's like you go to buy an EV. There's not even like a question. In the United States, it's still most commonplace, right, for people to go buy an internal combustion engine. I think that is going to change over the next 5 years. But in China, it's like if you were to go buy a brand new internal combustion engine vehicle, like it'd be looked at as insane right now. Like you go to buy a new EV and that's it in China. And so what we're seeing take place in China, I think you're going to see play out much more over in the United States over this next 5 years and in Europe as well, which obviously does not bode well for oil prices overall as less and less internal combustion engine vehicles are out there over this next decade, right? Now, on top of that, right, we have recessionary fears for 2024, right? Now, the important thing about that is in regards to crude oil and oil price in general, right? And this is why, it's baffled me because I listen to so many people, in the back half of last year and into this year talking about, they think the economy is going to be bad. They think the recession we're going to hit in 2023 in all these sorts of things, right? And yet they're bullish on oil. And I'm like, that doesn't make sense. That literally doesn't make sense at all, okay? If there's recessionary fears for 2024, which I think there's a lot of recessionary fears still around the economy in 2024, I think we're at a place right now where people are either neutral on the subject or they're bearish on the subject. So basically, they're either thinking we're going to have a recession in 2024 or they're kind of like, I don't know, maybe like a 50-50. And I'm actually in that 50-50 camp of like, I can see we could have a recession in 2024. I also see a scenario where we don't. But I don't think you have that many people that are actually super confident that there's no recession in 2024, right? Here's the deal. If we have a recession, oil is going to go down epically. Okay, this just shows you the Dow Jones Industrial Average, but I wanted to show you what happened to oil during those crashes. During the Great Financial Crisis, oil went to the 30s. A barrel of oil went to the 30s prior to the Great Financial Crisis, which, keep in mind, prior to the Great Financial Crisis, fracking hadn't taken off in a substantial way at all. We had several different Middle East conflicts going on, and the demand for oil was sky high because this is before, obviously, EVs, solar started to take off, anything like that, right? And so oil went from like $140 a barrel down to the 30s, folks. down in the 30s. The price of oil dropped like 80% or so in the great financial crisis. Now, what about the Rona crash? Oil went negative. Like, I never even thought that was possible. But literally the price of oil went negative during the Rona crash. Now, don't ever expect oil to go negative ever again in your lifetime. That's likely not happening. But that did happen, right? So the bottom line is, if we were to talking about an actual recession does hit in 2024, that means a slowdown in travel. That means a slowdown in spending. That means a slowdown in people traveling around in vehicles, right? Less work out there, less handyman going to drive his truck over to that job site over there, which means ultimately less demand, which would mean much lower oil prices. And if we did have a recession in 2024, what do I see oil price going to in that sort of a scenario? I could see oil at like 55. Oil at 55 or something like that. Like, let's say hypothetically we actually had a legit recession either in the first quarter, second quarter, sometime around then, and it's like, oh man, it's finally here, a recession's here, right? Yeah, I can see oil like 55, something like that. In that sort of scenario, do I think we're going back down to the 30s for oil? Probably not. Do I think we're going negative with oil? No. Okay, no, that was a freak situation in regards to that. So the whole situation in regards to oil doesn't bode well. Now, if we look at its friends, right, the other commodities out there, these ones are all struggling right now. There's no movement in commodities upward at all. Natural gas, for instance, nat gas, which this is actually, we're going into a kind of a bullish time period for nat gas. Nat gas is down 61% in the past year and showing no signs of life at all. For basically this entire year. Like, look, literally, you could pull up all of 2023 in nat gas that showed no life this entire year. Okay? And so there's no movement up from nat gas that makes you say, okay, oil's got a spike. We got a movement here. If we look at the commodity index in general, GSG, this baby's down 6% in the past year. And if WTI keeps going down, this baby's going to keep going down. So there's no movement upward in commodities at all. So the bottom line is oil price continues to crash. If we do ever actually get a recession, it's going to crash a lot more, I can tell you that. And this all bodes very well for inflation numbers in 2024. It bodes very well for that sort of scenario. So we'll see. The only thing I can see spiking oil is if the Middle East conflicts got out of hand. That's it. Outside of that, I see no other scenario where we get some sort of massive spike up in oil and we go to $100 a barrel anytime soon. Outside of the Middle East just going out of control and just, and so that's not a very comfortable thing to stand on if you're a bull in regards to oil, is you need, a kind of a freak situation to happen for your upside. That's never a fun scenario in the market, okay? Alrighty, so that covers oil, kind of what's going on with commodities. Let's start talking about the stocks. We had a plethora of earnings coming out after the bell, and then we'll get into Palantir and many other various things, okay? Upstart Holdings, which this stock was. Do you know what this stock was in 2021? Can you guess what the share price of Upstart Holdings was in 2021? After hours, the stock is down over 22%. It's down to $22.90. Their earnings were overall very disappointing. Some of these earnings we're going to get into in depth, and I'll show you the earnings reports, and I'll give you my grades and everything. Upstart was just overall very disappointing earnings in the fintech space, okay? Upstart in 2021, its share price was, listen to this, $390 a share. $390 a share, folks. And this stock is $22 now at this point in time. And who knows, maybe tomorrow it's under $20 at some point in time. That's pure insanity, okay? Check this out. Toast is getting absolutely toasted in after hours action. That one is down about 18%. I would say from Toast, it wasn't like they reported the most disappointing quarter in the world. It's just it wasn't very exciting. And for a lot of these newer age companies that are money losers, just people don't have patience for these stocks. I mean, if people don't have patience for flipping flapjack and PayPal, you don't have patience for PayPal, a cash flow generator, a cash flow machine, an ATM. Like, you're not going to have patience for these companies like Upstart and Toast to report meh earnings. Like, meh's not getting by, okay? That's a disaster. If we go ahead and pull up the hood is back down to the hood, okay? The hood's back to $8 a share after hours. We'll see where it trades out tomorrow, but the hood's back to $8 a share. I almost said $8 an hour. That reminded me of the days I used to work and make $8 an hour. I think I still make about that much on Twitch. Holy smokers, that's no joke, okay? But the hood's back to $8. I looked at Hood's earnings. I looked at Hood's balance sheet, okay? here's the good news. The good news is Hood does have a good balance sheet. It does. I like Hood's balance sheet. Bad news is the income statement was really disappointing. They're still losing a lot of money on the bottom line. A lot of people were expecting nice profits, and it's just not there. And they're making a lot from interest income right now, but just outside of that, there's really not much going on. So pretty disappointing overall for the Hood. The good news for the Hood is Bitcoin has started to recover here recently, so that should, be something that's a positive for them. And there has been some stock recovery here very recently, but overall, numbers it's been a very disappointing last couple of years for the Hood, right? And as to be expected, you say you're going to jack up interest rates the way they did at the Fed, and it's going to produce a situation where companies like the Hood are going to falter, okay? No, I do believe the Hood, along with many of these fintech companies, are all bottoming out this quarter we're in, and they're going to actually see momentum in 2024, regardless of the market conditions. So do keep that in mind. So that is something interesting, and I don't know, is there a potential I buy the Hood at some point in 2024? Who knows? Maybe. I'm not in a rush. I'm not in a rush to buy Hood, but maybe I go to the Hood. We'll see, okay? Lucid is down after hours. Folks, let me be very, very clear. And I mean very clear to everybody. And by the way, if you don't know Lucid, they make this a vehicle called Lucid Air. It's supposed to be this high-end sedan that's trying to compete with the Model S, and you don't want to compete with the Model S, okay? Lucid, most people have no clue outside of the stock market what the hell Lucid is, what the company is, what they stand for, their values, the marketing. Like, people don't even know about this company for the most part, okay? But they want it to be a wannabe like Tesla, and they've kind of made a fool of themselves over the years, saying they're going to do this and do that, and just been a serial disappointer, okay? But before I show you the income statement, which is the worst income statement of any company that's reported this entire year, certainly this quarter, okay? Let me be very clear about Lucid. This company could face bankruptcy. And I mean a serious possibility. How serious? I'm talking about this probably about 75% chance. This company goes bankrupt in the next, I would say, 1 to 2 years. 75% chance if I had to put the odds on it, okay? So there's always a potential they could keep raising money, but I'm just looking at their cash burn. I'm looking at how bad this income statement is, folks, and I'm telling you, I think there's about a 75% chance the stock goes to zero, like Robert De Niro back when he was in Last Action Hero. He was never in that movie, but I heard he was having kids, $30,000 a month. Alrighty, so Lucid, look at this balance sheet. I couldn't even grade it as an F. I couldn't even give him an F grade. It's below an F grade. An F grade's too nice, okay? Look at this disaster zone for Lucid. Holy smokers, this is no flippin' jokers. $137 million in revenue they did. In this same quarter last year, they did $195 million. Uh-oh, this is supposed to be a growth stock. Their revenues have plummeted for this company. This is supposed to be a growth stock. They should be growing. Like, the revenues in this quarter should have been 300 mil, 400 mil, something like that if this is a true growth company. And they're ramping vehicles like they should be. And their revenues plummeted? Oh my gosh. Their cost of revenue, $469 million. So their cost of revenue didn't even drop as much as the revenue dropped. What? This is a disaster, folks. I mean, anybody that knows anything about financial statements, like when I tell you a company brought in $137 million of revenue and their cost of revenue was $469 million, like, what are we talking about here? Like, this is the biggest disaster I think I've ever seen. And I've seen some damn disasters. Shaft. Look at this. Research and development, they're now spending $230 million on research and development. So they're spending nearly 2x the amount of revenue on research and development of this company. Holy smokers, this is a disaster. Selling general administrative expenses, $189 million. That's versus their revenue of $137 million. I've never seen it this bad. I've seen some horrible income statements over the years. And I mean horrible. And a lot of these damn stocks that went public in 2020, 2021, the worst group of stocks in the history of mankind, I think, to ever go public. I've seen so many very disappointing income statements. I've never seen one this bad, where their cost of revenue is like 3x plus their revenue. Like, that's crazy. Where the research and development is nearly 2x their revenue, where their selling general administrative is like 50% plus higher than what their revenue is. This is extraordinary. This one takes the cake of cakes, okay? Total cost and expenses, $890 million. Their loss from operations, they lost, folks. Loss from operations, nearly over $750 of $1 billion, almost said $1 trillion. I was thinking about the U.S. debt. Okay, over $750 million lost from operations. $752 million lost from operations. I mean, it doesn't get worse than that. Okay, Lucid disaster. Now, Rivian. Okay, let me talk about Rivian for a moment here. I told you guys this entire year, if there's one stock I was forced to own, you said I have to buy an EV company other than Tesla. There's only one stock that you can even consider, and that stock is Rivian. And that's it. I want no piece of anything. And I really don't even want a piece of Rivian. I already have exposure to that through my Amazon shares I own, right? Because Amazon owns a big portion of Rivian. So Rivian, they're burning through money like it's nobody's business, but they're not a complete disaster like Lucid. Rivian actually has some good products in the market. Their pickup truck, their SUV, they have some good products in the market. They're burning money like crazy. Their revenues are in a good place. They got the Amazon relationship, and now they're going to be able to sell their delivery vehicles to other people outside of Amazon as well, which I think is good for Rivian. So Rivian at least somewhat has their act together. Lucid's a complete disaster. You know, there's a big difference. Like Rivian, do I see Rivian going bankrupt? I would say probably a 75% chance they don't go bankrupt over the next few years in regards to Rivian. Versus Lucid, probably 75% chance they are bankrupt within 2 years. Okay, so it's a complete flip in regards to those two stocks. But what a mess! And you got to think to yourself, if Tesla's feeling the pain Tesla's felt recently, I mean these C-list celebrities are going to just feel a lot more pain. The Lucids and the Rivians and all these other companies, right? And by the way, I don't even want to put Lucid and Rivian in the same sentence because Lucid is so much worse than Rivian. It's not even funny. It's a disaster. Okay. Dutch Bros reported earnings after the bell. The Dutch is up about 4% after hours. We'll see where it trades out tomorrow. I wouldn't be surprised if it loses gains. We'll see, though, okay? So, in regards to the income statement of Dutch, I graded him a B. As far as company-owned shops, revenue, $236 million versus $173 million in the same quarter last year. Franchising and other, $28 million versus $25 million in the same quarter last year. Total revenues, $264 million versus $198 million in the same quarter last year. Cost of sales was obviously up considerably for the company. I mean, if their revenues are up like that, it's going to be up. Selling general administrative was up. Obviously, the company's in expansion mode. SG&A is going to be up, but I thought they kept that pretty in line considering how many new stores they have. I thought they actually kept SG&A pretty in line. So total costs and expenses was up for the company as to be expected. Income from operations came through at about $24 million, over $24 million, versus income from operations the same quarter last year was around $5.1 million. Interest expense was a red spot for the company, $9.3 million in interest expense versus $5 million in the same quarter last year. This is a trend we're seeing that's going on with a lot of these companies, folks. Interest expense eating up a lot of these guys with obviously the change in interest rates over the past year or so, right? Income or loss before income taxes, over $15 million versus a $1.7 million loss in the same quarter last year. Net income, $13.4 million versus $1.5 million in the same quarter last year. But it is weird. They have this net loss, income or loss attributable to non-controlling interest. And so that took a huge chunk out of that. So net income actually attributable to Dutch Bros was actually only $4.2 million. So very strange. I never really see a percentage number that big in between those. So that was a little strange. But anyways, EPS came in at 7 cents versus 3 cents was expected. So I would give the income statement a B grade. They have some weak spots certainly there, but they have some things that are going pretty exciting, especially on the revenue side. Now, one thing that kind of troubled me a little bit with Dutch, and one reason that we'll see what happens with their stock over tomorrow and over this week, but I honestly wouldn't be surprised if Dutch gave up gains. And the main reason is this is not that good. Company operated same-store sales increased only 2.8% for a company. That's a little troubling. Given how much inflation we had and price increase and all those sorts of things, to only see up 2.8% on a year-over-year basis is a little disappointing. Very, very disappointing, especially for somebody that sells cheap stuff like a Dutch Bros. It's not like they're selling, $10,000 couches like an RH or something like that, right? So I thought that was troubling. Now, on the Twitch live stream here today, right, I brought out an interesting point in regards to Dutch Bros and something I think is hurting their business model right now, okay? And if they fix this thing, it could be magical for Dutch Bros' business model. But on that live stream, I was talking about Dutch Bros is a little bit of a victim of their own success. What do I mean by that? Well, they do a lot of business, and I mean a lot of business, and their lines are long. But the problem is, even I've experienced this myself where I'm like, I'm going to go to Dutch Bros. And so, I'm driving by and then I stop by the parking lot and I see the lines and I say, hell no, peace out, I'm out of here, okay? And the reason being is I'm not going to spend 20, 30, 40 minutes in line, which is a lot of times what it's going to take when Dutch is really busy, just to get my coffee drink. Some people are willing to wait that long, right? So people like myself just say, it's not really worth it. Like, I'm going to go do something else, okay? Or there's also a scenario where a lot of people are on time crunches, right? You got to be to work at a certain time. You have to pick up your kids at a certain time from school. You have to do this or that. And so Dutch Bros probably misses a lot of customers because they see that line. They're like, dude, I don't have 25, 35, 45 minutes to wait in that line to get my freaking cold brew, okay? That's just too damn much. And so I just see consistently like Dutch Bros takes too long for the orders, and they'll place order, you'll get your order placed, and then you get to the window and they still don't have it ready for another 2, 3, 4 minutes when you're at the window. I've seen from a lot of these Dutches, and like, what's the point of taking the order? I don't know what that noise is. That was weird. What's the point of taking the order way before if I get to the window and now you're just going to make me the drink? Like it should already be ready, so as soon as I hit the window, like the drink's there and I'm gone, right? And so that's just something I'm seeing in their operations, that it looks like they're running a little too slow, and so that could be a benefit long term if they can fix that. But for now, I think it's actually hurting the business model. I think that's just one of many components why their same-store sales was so weak in the quarter. I can tell you in that quarter, I certainly skipped probably a few times because I'm like, and my wife complains about the same thing. She's like, I'd go there more often if it wasn't for the fact that you got to wait 30, 40 minutes in line many times because the line takes so damn long to go through, okay? So it's just something to keep in mind there. Corsair Gaming. So this is a stock. I have a much smaller position than I used to, and the reason being is, it's just not as appetizing as it once was, right? So Corsair Gaming, down about 3.5% after hours. Who knows? Maybe it comes back during the trading day tomorrow. I looked at their income statement. I would give it a C grade overall. Net revenues were up to $363 million versus $311 million in the same quarter last year. Cost of revenue, $273 million versus $240 in the same quarter last year. Gross profit grew to $89 million versus $71 million in the same quarter last year, so that's good. Sales, general, and administrative, I didn't like that number being up that much. $74 million versus $67 the same quarter last year. I would have loved to see SG&A flattish on a year-over-year basis, considering where the business model's at right now. So I was a little disappointed there. Product development was up a little bit year over year. I can understand that. Total operating expenses came in at $90 million versus $82 million. So operating loss was $758,000 versus about $11 million operating loss. So clearly they're making good strides on the profitability side, right? Now, interest expense actually did something you aren't seeing with many companies. Interest expense for the company actually dropped year over year. So I was like, hey, that's something good. Net loss for the company was $2.8 million versus about a $6 million net loss in the same quarter last year. So, making strides, but we still got work to do on the margin side, still have work to do on the profitability side, and that's why I gave Corsair a C grade. A lot of improvement on a year-over-year basis, but we're not there yet. We're simply not there yet, okay? Next up here, Wynn Resorts reports earnings in the next 48 hours. This stock I've been buying recently. I really like Wynn Resorts, but there is something troubling I'm seeing here with Wynn Resorts, okay? And I haven't seen this for a while. This is room rates in Las Vegas, okay? So, something troubling I'm seeing here is I haven't seen room rates for the Wynn properties in Vegas at the $200 range for quite some time. It's been a while, okay? And I'm looking out there and I'm like, damn, man, there's a lot of $200 type numbers for booking a room at the Wynn or the Encore. If you want a room on the 8th or the 9th here this month, $229, $279. I'm looking at like the 20th, $229. Like, those are numbers I haven't seen at the Wynn in a while. Obviously, if you're wondering why they're booked out and why these numbers say $2,400, that's because that's F1 race weekend. So yeah, it's $2,400 for a room on F1 race weekend. If I look at December, a lot of 200s, a lot of 200s, a lot of 200s. So it does make me wonder if we're starting to see a real slowdown in maybe travel that a lot of these people are talking about in regards to the weekdays, right? Obviously, the weekends are still strong, but I gotta say that's not the best sign I like to see. Now, keep in mind, Vegas is always much less busy during kind of November, December, January, February, usually kind of slower months. You have some convention business that comes in a little bit in January, February, which helps out a bit. And we have the Super Bowl this year, which is kind of a freak event, which is good for us, obviously, in Vegas. But yeah, I thought this was a little troubling, seeing some of these room rate numbers here. And so it does make me think like maybe Vegas is going to slow down next year. I don't know. We'll see. I just think that's something to kind of keep in mind. On the flip side, does it matter for Winstock? Absolutely not. It just doesn't. Macau is tearing it up. And Macau is going to continue to tear it up because basically Macau was locked down for years, and this is like the first year of them opening back up Macau in a real way. Next year will be the second year, so you should see even more growth next year. But Macau, booming. Okay, the October numbers were ridiculous for Macau. They're talking about it's the highest print in 45 months in Macau, and the growth month over month, year over year, phenomenal. So Macau's putting up huge numbers regardless. So. Not worried about Win. Win's a buy. Anything under 100 is a buy for Win. As a long-term investor, give me anything under 100. If you can give me Win under 60, that's a silly buy. But anything under 100 is a buy in general, and I'm usually going to do very well with that. This is completely random. I was searching something, and then I find this. TikTok, hiring in Scottsdale. If anybody lives on the east side of the valley in Arizona, hey, man, got some roles out there for Tiki-Talkie. They're hiring in Scottsdale. There you go, baby. Okay, now, Palantir. We've got two bad things and one good thing to get to in regards to Palantir. Okay. First up, Jim Cramer. Cramer came out and he said Palantir is a buy. He says, it's that time again. Jim Cramer called the stock a buy. Okay. And so everybody, grab a screenshot of your Palantir gains and kiss them goodbye. Oh, man, okay. In all seriousness, there's a lot of people saying that's a top for Palantir now because Kramer's came out and said, I don't believe in that stuff. I kind of feel like it's a little bit of witchcraft. I don't believe in that stuff. But there's a lot of people that do, and so they believe that literally because Cramer came out and said Palantir is now a buy, that the stock's going to start going down. So we'll see. We'll see. Hope for the best. I don't know. We'll see, okay. Second thing is, in regards to this, NHS. So it looks like Palantir's won the NHS deal, but it keeps not being official, okay, essentially. And it kind of keeps getting pushed down, delayed, and people are like, what is going on? What is taking so long? Is it like, something that they have to do on the branding side to make this deal make magic? Or so it's frustrating. And as Palantir shareholders, we just want it to be official, and that's it. But we're still not at that point, and so maybe it comes later this month, maybe it comes in December, or maybe we have to wait all the way to 2024. It's just frustrating that it keeps getting pushed down, and we're like, can we just get this freaking over with and announce this damn deal? So that's something we got to deal with there, okay? No, this we have a huge Palantir community in the private stock group, right? Some people that have worked with the product over the time in different capacities on the commercial side or on the government side or whatever, right? And just a lot of Palantir folks in general in the private stock group. And so always sharing stuff in the Palantir chat. And somebody shared this. HSBC upgrades Palantir to buy from neutral. HSBC said it upgraded Palantir and that it's increased conviction in the company's business model. And it's increasing its price target to $21 from previously it was at $16. So one of the good things we got for Palantir is I think you're going to see a lot more coverage initiate for Palantir in 2024. A lot more analysts cover the stock, and we're going to have still a lot of upgrade cycles to go because the stock's doing so well. These analysts have to keep kind of chasing numbers, which bodes well for the share price because then these analysts just keep upgrading their price targets, and then you get this guy goes from 16 to 21, and then if it goes 20 from over 21, and let's say it goes to 23, then he's got to go from 21 to 25, right? And so you kind of get into that cycle. So that's positive momentum in regards to stock price overall and just visibility for the company. Now we have some earnings coming out over the next 2 days that are very interesting. Disney's going to be reporting. Twilio, Affirm's going to be a huge mover, likely up or down after upstart today. I'd be a little scared if I was a firm shareholder. Space is going to be reporting. That's many times a big mover. And then Unity, Trade Desk, Wynn Resorts, and then two Jack Jackson players, some of the more known Jack Jackson players. Those ones could potentially move Avant in stocks like the Planet. We'll see what happens there. But Thursday should be a very interesting day after the bell there, okay? Appreciate y'all joining me as always. If you'd like to apply to join my private group, get access to all my course curriculums, join the 6- and 7-figure member chats, all those sorts of things, and kind of level up your game, then you can apply with the pinned comment down there, fill out that application, and we can see if we get you in there maybe the end of this week or something like that if you want access to all that type of stuff, okay? Much love and have a great day.